Hey guys, Dwayne here. I'm going to make a short video. I cracked myself up. I'm going to try to make a short video. I want to talk to you about a couple things. Number one, it's been a few days since I've updated the podcast, the videos, the website in general. And you know, for years I've just been sort of fanatical about all of that stuff. And I'm not slothful by nature, but the last few days hasn't gotten done. I could blame it on the head cold or sinuses or allergies, or I could just say it didn't get done. And so here I am begging for your forgiveness. All right? Okay. Now that that's out of the way, this is the S&P 500 E-mini futures. Oh, today is Wednesday, the 8th day of May, 2013. Time now, 4:58 p.m. Pacific time. All right, just to put things in context. Here's what's happened so far this week. Now, I covered this on the radio show, but maybe you don't get a chance to tune into the radio show. So let me just bring you up to speed on where we're at for the week. In fact, I'll back up to Sunday. Okay? You know what? I'll even throw Friday in, just for good measure. Last Friday, we closed the week at 1609 in the S&P 500. Our highest weekly trading zone for the week was 1609/610. This makes, I believe, the fourth week in a row that price has either spiked above our highest weekly zone or below. I think on 3 occasions it spiked above, and on 1 occasion it spiked below. But by the close of business, we were back inside the highest or above the lowest weekly zone. And this past Friday it played out the exact same way, 1609. Okay, so that was Friday. Now here's the open Sunday night. There was no gap. Really no energy at all on the Sunday night Globex session. It was very, very quiet. For 9 hours, we stayed inside of a 2 3/4 point range. This is Globex. This is Friday. And then you see we just keep continuing right across. Now that zone, that weekly trading zone from last week was 1609/610. So there's 09. And there's 10. Just to kind of show you how it just did not move, man. It just creepy crawly. Finally, we caught a little bit of a rally. Monday, we had a range on the entire day of 8 points. Now, the average true range over the last 14 days has dropped down to 14 points as of today. Last week we were running 20, 21, but with that 8-point range on Monday, that brought the average way down. Now the average true range, the default number, the default look back period is 14 days, or 14 periods. If you're looking at an hourly chart and you want to know what the average true range is on an hourly, keep in mind the default look back is 14. And what do I mean by default look back? Double click properties, go to the bottom down here, window, C14. I can change it to any number, but here's what I've learned over time. A lot of these indicators that come with a platform, such as the ATR, most people are going to leave that at the default number. So I would rather be looking at what they're looking at than to have some big secret, you know. I know I've talked about that before, but it really is important and I think worth bringing up again. Okay, let's go back to the hourly. The range, 8 points. We hit the zone. Now let me get, well, we hit the zone overhead, 1615/16. Now this is a new weekly trading zone. In case you don't know, the weekly trading zones are emailed out to our partners every Monday before the market opens. I could wax long about the zones and why they're important, but really it's better for you to go to our website and just look at the charts that go back almost 3 years now. In fact, when you get to the end of the charts on our website, you can go back to our archive at archive.cfrn.net, and then there's a ton more charts that show weekly zones. And it's the same thing week after week. So price hits the weekly zone at 16, 15, 16, and then we get a retracement. Interestingly enough, price comes back to last week's zone where we closed on Friday, where we spent all these hours. This is an hourly chart. Touches that zone, off we go. Okay, now let me get last week's zone out of the way. All right, so once we start to rally, we get to this zone again. Okay, now there wasn't a lot of consolidation here. This is a little more what we're accustomed to. 1, 2, 3, 4, 5, 6 hours of consolidation at the zone. But look at this wild swing that we had on both sides of the zone. This candle is 8 points. 1 hourly candle, 8 points. The entire daily range on Globex, which includes the day session for Monday, was 8 points. So we get all of Monday's action in this one candle right here. At the close of this candle, it's almost as if all of this didn't even happen. Because where are we at? Right back inside the zone, 15, 16. And then we get a little rally, and we get up to a swing high of 1621.75. We pull back. We almost pull back to the zone for support. Swing low was 1617. So we came within 4 ticks, 1 point of the zone, and then we took off. Okay, this is today's market. Now our next weekly trading zone is way up at 1638/39. This is a big zone. Now the reason this zone is so big is we opened into the upper quadrant of our weekly trading zones this week. We normally open around the middle, but we open in the upper quadrant, and the upper quadrants tend to be a little wider. Okay, so I told everyone in the live trading room this morning and also during the radio show today, I said even though our zone is way up at 38.39, let me put these two little lines on the chart, and let me tell you now that when we get to 1629/1630, expect there to be resistance. Even though it's not a weekly zone, expect there to be resistance there. And sure enough, we hit that thing long after we closed the radio show out, and we've sold off over the last 1, 2, 3, 4 hours. Okay, not a deep pullback, but as you can see, it was obviously some resistance there. Unless we get some type of bad news, and there is no, tomorrow we have some jobless numbers coming out. In fact, let me just bring up a browser window real quick. If you have not downloaded our toolbar, you should do that. Go to cfrn.net, and on the right hand side of the page, just click the little link that says download our toolbar. Just takes a minute, and it'll put some really good information right at your fingertips. You don't have to go chasing around the internet looking for all this stuff. I won't go into all the details of the toolbar, but I will tell you this. There's no adware, badware, malware, or spamware. You have my personal guarantee as well as the guarantee of Jeff Bezos, the CEO of Amazon. Our toolbar was put together in conjunction with Amazon. It's got a ton of information that is of importance to CFRN partners, anyone trading Emini futures, anyone trading for that matter. You'll find the link to install the toolbar right here on the right hand side of every page. Download our toolbar. Okay, this is what that'll look like. Your antivirus will caution you, hey, do you know what you're doing? This type of file, could harm your computer. You just have to say, yes, I'm aware of that, and I trust this file. And then you'll get a little toolbar, just like this one right here. Okay, it allows you to listen to the radio 24/7 without, no matter where you're surfing. the radio's tied into your browser, so you can just listen. You can keep up with the blog. You can do your Facebooking, your tweeting, you can check your Gmail, all of that stuff right from your browser window. So that, that in and of itself is very handy. But for news, if you just drop the drop-down window, you can read our daily paper, follow us on Google+, Seeking Alpha, Daily Audio Bible. I could talk for an hour about that. Or daily economic reports. It'll pop up a window. And when that window pops up, it's going to give you some options. You can look at today's news. That's always going to be the default. But it's late on Thursday, so we really want to see tomorrow's news. Okay. And so tomorrow in the U.S. we've got... oh, are they already showing Thursday's news? They are. See, they're already showing Thursday. So, okay. Wait a minute. Here it is. Continuing or initial jobless claims. That's the only high impact news we have tomorrow. Okay. And then on Friday, Bernanke is going to speak. Where is that? I thought it was Friday. Maybe it was it Thursday and I missed it? Maybe I need to... Here we go, Friday. Bernanke speaks at 9:30. That's high impact. Typically, when anyone from the Fed speaks, if it's not the Fed announcement, typically it doesn't get a high impact rating. I don't know what's special about this. But do you see how this puts global economic reports at your fingertips? It's really important if you're trading overnight. Okay, like tonight. Okay, today's Thursday, May 9th. No, tomorrow's Thursday, May 8th. I'm sorry. Today's May 8th. Tonight, the New Zealand unemployment rate comes out. If you're trading the euro, the Aussie dollar overnight on Globex, you need to know that this is coming out. Just like a Fed announcement, you need to know. And then Australia itself, the employment change, the unemployment rate. See how these all have three heads? That's high impact. If you're trading overnight markets, I don't care what market you're trading in, when it's a high impact news event, you need to be aware of it. Okay, so this is just an easy way to be aware of it. All right, let's go back to today's chart, and it's free. All right, so there you go. We told everyone to watch for resistance here. We hit this one during the show, and then we showed, or no, we were here in the show, and we were looking for where the market might pull back to. And so in my ongoing attempt to demystify trading to the very best of my ability, I ask everyone, as the market was rallying and started to pull back, where do you think we will find good support? This little box here represents some Fibonacci numbers. We drew fibs just on the last leg. Okay. And at the time, that was the swing high. So see, this little box represents the 38 down to the 62. So I just drew a little box. So we know that's an area, okay, that somewhere in here, buyers might come in and bid the market up. Okay, what else can we learn just from this? And a number of the folks in the chat room during the radio show typed in the answer. I was very happy to see that. It's right in front of you. Boom. Did he just say boom? Yeah, he did. Okay. So we were waiting to see if it was going to pull back here to 1621.75. If it did, if we could get any kind of, bullish action off of that, we were looking to take a long trade. Well, it didn't show up on the hourly chart. In fact, I told everyone in the chat room at the time, I said, guys, because this is such an obvious place for there to be support and such an obvious place for buyers to come in and to rally this thing, you can expect buyers to potentially come in early. They don't see, people have a tendency in trading, they're afraid they're going to miss something. So they get their orders in early. You don't have to do that. You can wait for it to come back. And then instead of, see, a lot of times you hear people say, oh, you could park your order down here and just go golfing and then, come down and it'll fill you. Yeah, it might come down and blow you out, stop you out, and then take off. Well, that's no good. I'm more a fan of let it come into the box. If you're even using Fibonacci numbers, just you can throw that box out the window and just go with this support level. Now, why is that support? Well, because it was resistance. And in traditional technical analysis, you're going to hear again and again that resistance, once broken, will become support. The reverse is true too. Once support is broken, it will tend to become resistance. So on this move up on the hourly, we spent 1, 2, 3 hours trying to break through that area. Couldn't do it. Pulled back, made another run. That's as far as we could get. Pull back and another run. We try for 1, 2 hours to break through there. Can't do it. Pull back, gather some reinforcements. Off we go again. Finally, on this hourly candle, we broke through. Okay. Took us up here. And so on the pullback, we were looking for support anywhere inside of this box I drew with a very high probability of this 621.75 if it's touched being good support. But the very thing we spoke about, buyers coming in early, happened. Okay, it happened right before our eyes and it took off. Anyone waiting to get filled at 621.75 was left waiting. It's just that simple. They were left waiting. That happens. We talked at length today during the radio show. You can listen to the podcast. I didn't record the video today of the show. I'll record it tomorrow. But I did record the podcast, and I'll get that uploaded. You can listen. We talked a lot today about you never change your trading strategy based on the results of your last trade, or your last 2 trades, or your last 3 trades. Okay? You have to have a large sample size. In his book, Trading in the Zone, Mark Douglas talks about having a large enough sample size. This book has no charts, diagrams, setups, indicators, but it is the de facto go-to read about trading book. It doesn't really teach you how to trade. It teaches you how to think about trading in a way you've not probably, unless you've read the book, you've not thought about it in that way. It will change everything. It really will. That's $40 off the shelf. We have a sponsor of our radio program, Audible. If you send me an email, support@cfrn.net, I will send you a link that will allow you to download a free audiobook of Trading in the Zone. It'll take you about 7 hours to listen to it. 7 hours well spent. I'll be very surprised if you only listen to it once. Of particular importance is chapter 7. Okay, 6 and it's all you really need to listen to the whole thing. But if you want to dive into the meat, go to 7, then go back and do the whole thing. But send me an email to support@cfrn.net. And I can't do it, but our sponsor, Audible, will send you. Now, it's a free trial. They want you to be a member of their book club. All right? So you got to sign up for their free trial. And they'll give you 1 free audio book. You've got 2 weeks to check them out, and then you can cancel if you don't want. Now, I kept mine because I really enjoy it. That's why I brought them on as a sponsor, because I think it's a great product. But if you aren't interested in being in the book club, you don't want to get a book every month, go in and cancel. You'll be charged nothing. But you get to keep the audiobook. Now, there's 100,000 titles to choose from. You don't have to choose Trading in the Zone. But I recommend it if you have not read the book and you are a trader or aspiring to become a trader. You really, and it's free, a $40 book for free. That's hard to pass up. So take me up on it. Just email me and say, hey, I want the book. I'll send you the link. Once I get your email, if you're by your computer, you'll be downloading that book in 5 minutes. And then you'll be listening to it on your iPhone, your iPad, your Android phone, your desktop computer. True story. All right, let me move on. So don't be changing how you trade. Don't be changing your setup based on the results of the last trade. See, some people who didn't get filled here, okay, from now on I'm changing all my rules. I'm coming in early. Well, sometimes buyers won't come in early as a group. Sometimes it might come down here and really test 21.75. It might even spike below it. That's why I'm a fan of not trading into potential support. I want to be trading out of proven support. See the difference? We knew there was going to be, there was a high, let me say, we knew there was a high probability that there was going to be support somewhere inside of this box. Okay? But we didn't know where. Could we have just picked a spot and put an order? We could. Or we could wait for it to show itself. And it did. And I'm going to show you how. And we were all over that thing. All right? So take one more good look at this. You can buy the market as it comes into support, or you can buy it as support is proven. You buy it on the way out. Which makes more sense? Which is safer? Which is the higher probability trade? Isn't that what you're looking for, is a high probability trade? Now, let me say this. The stuff I'm teaching you right now does not require you to be a partner of CFRN. Doesn't require you to own our proprietary indicator set or any of that stuff. But you have to define, you have to clearly define the criteria and the terms of your high probability setup. You can spend as much time as it takes to do that. See, the benefit of plugging in with CFRN is we have proprietary indicators, we have proven trade setups, we have a proven methodology. So while you could struggle for a while trying this and that, and you know, I'm going to try 20 sample trades here. Okay, now I got to fine tune this thing. Now I need to do another 20 so I have a decent sample size. And okay, that didn't pan out so well. So now I got to do another 20 trades. We've already done all that work for you. How much is that worth? Oh, I don't know. You have to put your own price tag on that. It's really priceless, invaluable, whichever. We've already done the work. We present you wrapped up in a neat little box. Okay, here is high probability, all sealed up with a bow on it. You just have to learn how to trade it, and we'll teach you how to do that. That's what becoming a partner is about. Not only do you own the indicators and own the setup, but we teach you how to do it. Okay, and we spend 3 months, 2 hours a day, Monday through Friday, live trading real money in real time in front of real people. You follow along, you trade in the simulator with us. Then we do the workshops on Thursday night, plus you have access to 200 hours of training videos in the partners area, plus other stuff. Okay? So, the guy on the hourly chart trying to buy the obvious support area got left behind. So, let's go look at our sentiment indicator. Okay? That's not it. That's it. Okay. Price pulled back. Now our sentiment indicator, if you've never seen a video before, I'll shrink it down in a minute and just show you how easy it is to read. But on this particular trade, price was pulling back, okay? And once we pierce the bottom band, okay? Once the bottom band gets pierced, we're waiting. This candle prints right here. I said, there we go, guys. That is a trigger to go long. Okay. Actually, that's the signal candle. This is the actual trigger candle. And the trigger is basically you just buy the open of the next candle. So that's kind of a combination, signal trigger. Now the entry on that trade was 1623.75. Now where the hourly didn't catch it, on a smaller time frame, our sentiment indicator nailed it. Okay, gets you in at 23.75. Where's your risk on this trade? How do you define your risk? Very easily. You go a couple ticks below the swing low. That's it. Couple ticks. Because anything more than a couple ticks, and this is not a pullback, this just became a reversal. Okay? Pull back. Now, again, we didn't buy it coming in. No, we let it prove itself. This green candle, this bullish candle, tells us we're heading back out of here. So we buy the open of this candle, 23.75. All right, now you got to establish a target, right? Okay, how do we go about doing that? A couple different ways. Number one, we can draw a simple trend line right across these two tops. It only takes two candles to draw a trend line. So we've got these two candles. We draw a top across there. So I told everybody, I said, guys, 1626 is going to be an obstacle to any further advance. Okay, 1626 right here. That's where price strikes this trend line. I said if we can, now that's good for 2 points. If you get in at 23.75 and maybe you're getting in market if touched, so you pay a tick for slip, you still are able to pull 2 points out of the trade. If you stay with it, if you overcome the obstacle, and we did, I said if that's overcome, then the next obstacle is going to be the high of the day. So I drew this horizontal line across here at 27.5. Okay, that was the then current high of the day. I said if that obstacle is overcome, we're going to go back over here and we're going to look at this right here, this 29.30, and see what we did. We hit that. And so over here, while I don't have it on the chart, it was on my hourly chart, and everyone knew that 29 would be the next and most important obstacle to this trade. So there's an initial target, there's a secondary target, there's a third target. 23.75 was the entry. I call it 24. We ran to 29.5. So there was the market made, not CFRN, not our indicators, the market made 5 points available to you, the trader, in this 1 hour time span. Okay, roughly an hour. See, the entry was 13:46 Chicago up to the close right here. Okay, so the entry. Now, if there's anything about this setup you don't understand, email me, support@cfrn.net. I'll attempt to explain it to you in an email, and if need be, myself or Michael will launch a private go-to meeting with you and help you better understand it. But a beautiful little trade, and it allowed us to take advantage of a setup that we couldn't get into here because this one just left, but this laid beautiful groundwork. See, we knew that on the 7-minute that we had at 21.75 we had additional support here. Okay. Now, had it come down and hit that support, like maybe we got in, you know, it wobbled and dropped, we could have taken our stop and then got right back in. Depending upon your risk profile, knowing that 21.75 was the area for good support, based on this, okay, depending upon your risk profile, you might have just chosen that as your stop. Okay, that's a worst case scenario for the stop. More conservative would be just a couple ticks below the swing low. Okay, all right. So here you have it, just pure price action. You don't need any special indicator for this. And using our indicators, you're able to take advantage of the trade. And a nice trade it turned out to be. Okay? All right. That's about all I want to cover. Oh, I'll show you this trade. We did this trade as well. Now, it was a counter trend trade too. Okay? Let me just jump over here. Let's see, did I already snap a shot of that? Well, I can snap another shot. Let's switch this out to the 6E. Okay. Once price got here, I'm now looking for price to go to here. Okay. Actually, I take that back. Price was up here, and I was looking for price to go to here, roughly. Okay. All right. Actually, I was looking for price to go to because we were back here. That's what it was. Yeah. 131.50. Now, again, and I put this on the chart to make sure everybody understood, this is a counter trend trade. We're in a bullish context. So I'm looking for support here because I'm looking for another rally, okay? But what we did was we went from here, we dropped down to our 6E. Now, the entry price on this was 131.64. That's the price we chose to get in at. So let me show you how that worked out. This is our slingshot indicator. We got into this short trade, this counter trend trade, at 131.64, right there. Okay. We had like 8 ticks in the trade. We originally had set our target down at 131.50. But then we just went ahead and got out because this thing stopped dropping. Okay. Ultimately, the swing low was 131.54. Had we just rode it out, we would have come within 4 ticks of hitting our target at 131.50. But with an entry at 131.64 down to 131.54, that was good for 10 pips. And a pip in the 6E is worth $12.50. So if you're trading one contract, this was a $125 trade. Okay, this move here, and it went pretty quick. Okay. One contract, $125 move. 10 contracts, you can do the math. At one contract, there's nothing wrong with making $100 on a trade. In fact, that's our daily goal per contract, is to make $100. You only need 2 points in the S&P, or we didn't even need a full 10 points here. At $12.50 a tick, if you take $100 and divide that by $12.50, you really only need 8 ticks. Okay, 8 ticks on the 6E will make you $100. And then once you get really good at taking 8 ticks, if you like trading the currencies, if you like trading the 6E, if that's kind of your bag, you know, you just feel comfortable there, something calls you. Once you get good at taking 8 ticks out of the market, even if it takes you a couple of trades, you know what? Even if it takes you 10 trades, between me and you, I don't care if it takes you 100. If you net 8 pips or 8 ticks, whatever you want to call it, on the 6E, that's $100. Once you get really good at that and you start, you know, you make $1,000. So you add another contract, you make 1,000, you add another, you make 1,000, you add another. Pretty soon you're trading more contracts, but you still only need 8 ticks. See, so many people get caught up in thinking they got to figure out how to get, you know, 10 points, 20 points, 30 points, or whatever it might be. Or, you know, I see a lot of this Forex stuff out there. You know, make 100 pips a day. Well, okay. God bless the guy that makes 100 pips. But, you know, answer me this. Which is easier, to make 8 pips or 100? You don't have to think that hard. The answer is 8. It's got to be easier to make 8 than 100, right? But how hard is it to add another contract? Now, there's more risk, of course. There's greater risk and greater reward. Futures trading is risky. You can lose all your money. We know that. You know that. But just think about the concept. Once you get really good at taking 8 pips out of a 6E trade, all you got to do is layer on more contracts. And you can layer on as many as you want until you feel comfortable, or until the market won't support the orders without giving you slippage. It's one of the reasons so many people are attracted to the S&P. The liquidity is so great that you really don't ever have to worry about getting filled. There's always somebody willing to take the other side of your trade. If you're long and you're ready to get out, there's somebody there to take the trade. If you're short and want to get out, there's somebody there to take the trade. You're long and hit your target, no problem getting out. You're short and hit your target, no problem. And with most of these markets, there's no problem during the day session. Different markets, whether it's currencies, crude oil, they have different times of the day when they are more liquid. And how do you find out what hours of the day are most productive for any particular contract? Very simple. Grab you a daily chart like this one. Bring up a volume profile. Okay, let's go look at the ES. This is natural gas we're looking at right now. But the natural gas contract just switched. That's why we just recently started showing volume back here in April. Well, the same is going to be true with the ES. Oh, you know what? We need to go to an hourly chart. I'm sorry. Well, let's switch it to the ES. And now let's go to an hourly. Okay, so this is an hourly. Okay, you can see these big green bars. You can see where the volume is. And that's going to repeat every day. You're going to have days with less volume than others. Monday was just tiny volume. Last Friday was pretty good volume, but you'll notice that the volume always comes in during the same hours. Okay, let's see what hours the 6E has the most volume. That's really the time of day you want to be trading. Okay, this looks to me like 6 o'clock Chicago time. I believe this is set on Chicago time. But you can do it on your own chart and figure this out. So there's like a 4-hour window from 6, 7, 8, 9. So it's really, this is the, yes, 6, 7, 8, 9. So 4 hours. There's a 4-hour window there with good volume. Now, Monday, not much volume. Tuesday, see, those 4 hours had the most volume, but there's not a lot of volume there. Now, this hour had 31,000 contracts. Even these little small, that's 17,000, 15,000, 15,000, 23,000. So if you're a 10 contract trader, you're going to have no problem getting filled during those hours. But if you try to trade it during these hours, when there's only 1,000 contracts traded, or see, this hour had 394 contracts traded. Again, if you're only trading 10 contracts, you may not have a problem, but why not pick the hours of the day that are the most productive for the market you want to trade? Now here, this was pretty good volume all day, 10,000, 11,000. But you'll be able to go look at that market, the one that you want to, trade, and you'll get a quick idea where the most activity is. Let's look at crude real quick. GCLM. I don't think we haven't switched to July yet on crude. Okay, it starts getting busy about 6 o'clock Chicago time. So like it peaked here at 8 Chicago. Crude's pretty good all day. 27,000 contracts, 17,000. Over here it kicks in. It kicks in at 7 Chicago time on this day. 6 Chicago time. 5, 6. Well, it really kicks in at 7. I mean, it really stands out where the volume is in any given market. And each day is going to be unique, but you'll figure it out really quick. Okay? All right, that's really all I've got. If you have any questions for me, email me, support@cfrn.net. I'll do my best to get the website updated. Most Scotia, that means pretty quick. I will. No, really. If you haven't taken the free trial with us, I encourage you to. Here's how you do it. You go to cfrn.net / oh, you can't see that up there, can you? I got a browser hiccup. Hang on. Oh gosh, I just thought of something. When I was showing you the browser, the toolbar earlier, I think that was out of the screen. Whoops. You drag it down. Okay, cfrn.net /apply. Oh, do come on. All right, there we go. So 40 minutes on this video, that's not bad. For me, anyway. Someday one of you guys need to come over and show me how to just get it done quicker. So cfrn.net /apply. Hopefully your browser won't take as long as mine did. Name and email, that's all we need. Okay. We don't need your mother's maiden name or your favorite pet or the street you grew up on or any stuff. Take the free trial. Now, during the 5 days, you get to watch us trade live, real money in real time in front of real people in our live trading room. You also get to download our platform, which is what you saw here, all my charts, and our proprietary indicators. We actually let you use them for an entire week and teach you how to use them before you have to make a financial commitment to become a partner. I don't know of any fairer way to do business. Even when you go to buy a new car, the test drive typically is like around the block. We give you a full week to really, road test it and see if it's something that's going to be useful to you. If it's not, we don't want your money. If it's going to become the cornerstone of your new trading business, the foundation, then we want you as a partner. We want to build our businesses together. Okay, we've got traders from around the world that are building their business, their trading business with CFRN as the cornerstone and the foundation. We invite you to come do the same thing, all right? But we want you to test it out first to make sure it's something you're going to be able to put to good use. If it's not, then we don't want you to spend your money, okay? That's why we do that. Now, the toolbar that I thought I was showing you earlier, and it may have been out of screen, was here. And here's the drop down where you go to the daily economic reports and all that good stuff. Okay. One last thing, and then I really will go. CFRN.net /traders. I guess I just got too many things running here. There we go. Traders Prayer Breakfast. Every morning at 6 a.m. Eastern, we gather as a group for a morning devotional and to pray. It's not a religious gathering. It's not anything formal or stuffy. It's just a group of believers coming together to pray. You don't have to be a CFRN partner. You don't even have to be a trader. If you love God, love people, and love life, you're invited to come and hang out with us, okay? Now, the way you do that is you go to, that's a quirky address, Traders Prayer Breakfast. Now, let me open it up. Now you can't see it because it's up above. Oh, hang on. I got an answer for everything. There you go. Traders Prayer Breakfast. You just got to put the little dashes in there. Okay, that'll take you to this page. Every day we post whatever the scripture is that we're going to read and a little commentary. You just dial the number. Long distance charges may apply. And enter the access code. And it's an online conference call or telephone conference call. Okay. The only reason you need to come to this website is just to get the phone number to dial in. You can be walking in the park, you can be driving to work, you can be in your office with the door shut, you can be in your backyard petting a dog, you can be anywhere, and just It lasts about 20 minutes. But what we do is we open up, say good morning to everybody, we read the scripture, we have a little bit of commentary, about 5 minutes on that scripture, you know, what it means to us. Then we open the floor and go, hey, does that anybody want to share what that might mean to you? Does anyone have any prayer requests or praise reports that they want to share with the group? Okay, and then once that's done, let's pray. So one person will lead off praying, and then anybody else that wants to pray can chime in at the end, and then we dismiss about 20 minutes after. So it's free, and you can be as anonymous as you want to be, or you can come in and share your name and where you live. Also, if you want, right now, Paul does every Tuesday, Frank does every Wednesday, so Monday, Thursday, and Friday are still open. So if you're led to, you know, partake in the devotion at a higher level, you know, you want to actually lead the devotion, I'd love to have you volunteer. Just give me an email, support@cfrn.net, and say, hey, Dwayne, I would like to volunteer for one of those days. Or you can even say, hey, I'd like to do it one day. I've got something I want to share. I can't commit to every day or every Thursday or every Friday, but, you know, can I do it next Monday? Sure. Okay, just let me know what you want to share. I'll post it here on the website, just like I do every day. And we'll have a great time. It's a great way to start the day. All right? Okay, I really am done. I'm really going to get out of your hair. If you need me, support@cfrn.net. And I do hope to see you tomorrow in the live trading room. All right? God bless.